Hello everyone, in this video we are going to look at the answers for reading quiz chapter 6. So we have 10 questions here, and also I have some extra questions to solve because this quiz doesn't cover everything that's taught in chapter 6. So let's start with the first question. Question 1 is asking which of the following equation represents GDP measured by the components of demand. So let's write here the GDP equation. If you calculate GDP from an expenditure perspective, GDP is equal to consumption spending plus investment spending plus government purchases plus exports minus imports. And you can call this term net exports as well. So given this, the only option that fits to this, in the book also this is called trade balance. So we need to find out an option that fits to this equation, which is here, this one. Consumption plus government spending plus trade balance plus investment is GDP. Question number 2, assume the real GDP of Brazil is in 2020 was 6 billion real. So 6 billion real is the real GDP. If the exchange rate was 1 real is equal to $0.25, calculate the real GDP of Brazil in US dollars in 2020. So what you need to do is take 6 million and multiply by 0.25 with the exchange rate. 1.5 billion is the correct answer. Next question, which of the following statements best describe how economists calculate GDP? So the economists at the Bureau of Economic Analysis pull together data on sales, which represents consumption, imports and exports, that's the trade balance, government purchases, and investments from various government sources every 3 months. This is how we calculate the GDP. Question number 4, based on the following data, GDP would equal, and then we need to find out net national product. So we know how to calculate GDP. GDP is equal to consumption, which is $70, plus investment, which is $25, plus government purchases, which is $20, plus exports $5, and minus imports $10. So that is how we calculate GDP. So that is equal to, here we have -5, here we have 95, plus 15, 110. So GDP is equal to 110. So we have two answers for 110. We need to find now net national product. For net national product, we are going to get the GDP, net national product, GDP. We are going to sum domestic US business production abroad, which is $15. And then we will subtract foreign business production in the US, which is $6. And then we are going to subtract the depreciation, which is 5. So here is 110 plus 15 minus 11. That is going to be equal to 114. This is the net national product. So the right answer is 110 for GDP, 114 for the net national product. Question 5. Which statement best describes the difference between nominal and real GDP? We know that real GDP is inflation adjusted. Okay, for that reason, real GDP is nominal GDP, which has been adjusted to remove the distorting effects of inflation. The next question is GDP deflator. GDP deflator is a price index, and it is used to remove distorting effects of inflation from nominal GDP. Remember, real GDP is the one that's inflation adjusted. Question 7. Assume that in year 2010, US nominal GDP was 15 trillion, while the GDP deflator was 200. Calculate US real GDP for 2010. So let's write the GDP deflator equation. GDP deflator is equal to nominal GDP divided by real GDP times 100. So here is 200. I know nominal GDP is 15 trillion. I don't know the real GDP, times 100. So we can solve this equation. You can divide first 200 by 100. So 15 divided by R is equal to 200 divided by 100. 15 divided by real GDP is 2. So real GDP from this calculation is 7.5. The right answer is 7.5 trillion. Question 8. In 2010, the country of Utopia experienced the highest contraction of their economy. So highest contraction here at 10% in the previous 20 years before a new expansion phase. In 2010, the economy Utopia has reached a Toro. So this is called Toro. And here is called peak. Question number 9. Select the statement below which highlights the role of real GDP. The growth in real GDP has been much lower than expected over the last few years, so therefore unemployment has been rising. Okay, if production is increasing lower than expected, then we expect that unemployment has been rising as a result of creating hardship for many in the country. Next question, based on the GDP information in the table below for two countries, we need to find the correct answer. What we see here is that country A has higher GDP per capita in both years compared to country B. Therefore, country A's standards of living is higher than country B. And when you look at the increase in standards of living, both countries increase their standards of living from 30,000 to 32, 25,000 to 30,000. So both countries A and B, have improved their standards of living, but country A has higher standards of living than country B. The reason is because per capita GDP in country A is higher than country B. So for that reason, this is the correct answer. Now let's move on to the next quiz that I have. So we are going to solve also additional questions to make sure we understand this chapter. And the first question is, a Mexican oil field service company works on oil rigs in the US. The value of the company's services produced by Mexican citizens and the equipment they own is included. Since the production is in the United States, remember GDP has geographical proximity and it includes everything produced inside the country. Doesn't matter it's a Mexican or a Japanese company, but includes everybody's production as long as it's produced inside the United States. Therefore, it's included in US GDP for sure. And now this production of the Mexicans is going to be included not on Mexican GDP, but Mexican GNP. Why? Because GNP includes the production of its citizens outside of the country. Therefore, the right answer is here, C, Mexican GNP and US GDP. Next question, suppose an economy produces only burgers and bags of fries. In 2010, let's look at here, in 2010, we have 4,000 burgers and the price was $3 and 6,000 bags of fries are sold at $1.50. In 2008, the base year, burgers sold $2.5 and bags of fries sold for $2. So this is the base year. And now based on this information, we are going to calculate nominal GDP and real GDP for 2010. For nominal GDP, this is 2010 prices. And we use the current prices. Therefore, I'm going to use the current prices to calculate the nominal GDP. Nominal GDP is equal to $3 times 4,000 plus $1.5 times 6,000. So this is how we calculate the nominal GDP. This is 12,000 and this is equal to plus 9,000. Therefore, the nominal GDP is going to be 21,000. Now we need to find out the real GDP. For real GDP, I'm going to use the base year prices. This is the key point. For real GDP, we use the constant prices, which we always refer to base year. Quantities are from 2010, but the prices are from the base year. So it's going to be $2.5 times 4,000 plus $2 times 6,000. So this is going to be $10,000 and this is going to be $12,000, which is equal to $22,000. So the right answer is nominal GDP 21,000, real GDP 22,000, and the last part is going to be the calculation of GDP deflator. So GDP deflator is equal to nominal GDP 21,000 divided by real GDP 22,000 times 100, which is going to be 95.45. So we can now highlight the right answer. Right answer is C. Next question. If a state made previously illegal activities such as gambling or prostitution legal, then other things equal, GDP is going to increase, right? Because illegal activities are not included in the GDP because they don't have a market value. But once they become legal, they have a price and they are sold in the market. Therefore, GDP is going to increase. So the right answer is this one. Next question. Which of the following transaction would be included in GDP for 2015? Let's read all of them. In February 2015, Amanda sells a 2009 Hyundai to Isabella. So any used products, old products are not going to be included in GDP. Why? Because in 2009, the value of the car is already included in the GDP. So if you include in 2015 the sale value, then you are double counting the value of a car. B. In March 2015, Amanda buys a ticket to visit a zoo in Florida. She visits the zoo in February 2016. So the value of the ticket is going to be included in GDP for 2015 because it's purchased in 2015. So GDP measures everything that are produced, either goods or services, but they have to be in 2015 and they have to be new. For that reason, this is the correct answer. In November 2015, Isabella eats onions that she harvested from her backyard garden in October 2015. So anything that is produced at home does not have a market value. Regardless of when they are produced, if they are produced at home, they are not included in the GDP. Question number 5. Which of the following always uses prices and quantities from the same period? Remember, nominal GDP uses the current prices, real GDP uses the base year prices. Therefore, nominal GDP is correct, but not real GDP. So the right answer is B. Now let's look at this one. What are the GDP deflator and inflation rate for 1931? Remember, we use the GDP deflator to calculate inflation rate. So in order to find inflation rate, since it's a change of the price index from one period to another, we need to calculate GDP deflator for both 1930 and 1931. So now we are going to do that. So let's calculate the GDP deflator in 1930. It's going to be the nominal GDP in 1930, 91.2, divided by real GDP in 1930, which is 892.8 times 100. And then we will calculate GDP deflator in 1931, which is nominal GDP, 76.5, divided by real GDP, 834.9 times 100. And now we need to calculate first. This is equal to 10.215, and let's calculate this one. This is equal to 9.16. So now to calculate the inflation rate, if you remember, it's the change in the price index. So we take the recent one, which is 9.16, minus the previous one, 10.215, divided by the previous one, which is 10.215, times 100 will give us a percentage number. So that is equal to 9.16 minus 10.215 divided by 10.215 times 100, negative 10.3. So that inflation is actually a deflation, a decrease in prices. The right answer is here B. Number 7. Changes in nominal GDP reflect both changes in prices and changes in the amount being produced. So the real GDP reflects only changes in output. Nominal GDP reflects both changes in prices and changes in amount. GDP deflator reflects only changes in prices. Number 8, to encourage formation of small business, the government could provide subsidies. These subsidies are not included in GDP, okay? Would not be included because they are transfer payments. Remember, transfer payments are the ones that our government collects. Let's write it here. Government collects from you, people, and then transfers to the people who needs it. So there is no production here. You're taking tax money, and then give this tax money either welfare benefits or subsidies or unemployment insurance to the people who needs. So there is no production, therefore they're not included in the GDP. A US publisher purchases new computers that were manufactured in the US. This purchase by itself is actually an investment, right? Because US publisher is a company and buys new computers, therefore it's an investment, and it's a positive contribution to both GDP and investment. Therefore this is the right answer. And question number 10, the information below for 2008 in billions. Question 10, the information below for 2008 in millions was reported by the World Bank. On the basis of this information, which list below contains the correct ordering of the GDP per person? So GDP per person, if you remember, is the GDP divided by population. So we need to find GDP per person from highest to lowest, and we will use the real GDP. Therefore, real GDP is the one here, this one. Constant US dollars is the real GDP. Now let's calculate the GDP per capita. GDP per capita is, for the first country, Ghana, is 7,690 divided by 2335. And for the Kenya, 17,569 divided by 38.76. And for Tanzania, it's 15,394 divided by 41,276. And then we will order the real GDP per capita. So this is close to 329.34, and the other one is 453.23, and then 15,394 divided by 41.276, which is 372.95. So it seems like if we order from highest to lowest, Kenya should be the first, Tanzania is the second, Ghana is the third. So this is the right answer. So that's all for today. Thank you for watching this video.